Welcome back for another deep dive. You ready to dig into some more financial fun?
Always. What are we looking at today?
Today, it's all about Swiggy.
Ah, Swiggy. They're going public, right? The IPO is making headlines.
It is, and we're going to break it all down straight from the source.
Straight from the source, you mean?
Swiggy's own red herring prospectus dated October 28th, 2024. We've got excerpts here, ready to analyze.
That's the good stuff. A company's prospectus, it's like their financial confession. All their hopes and dreams laid bare.
Exactly, and right off the bat, something caught my eye, something unusual.
Oh, what's that?
They don't have a single identifiable promoter.
No promoter. Now that is interesting. For a company of Swiggy's size, you don't see that every day.
It made me wonder, who's really calling the shots?
Good question. But before we get all conspiracy theory on this, maybe we should step back for a second.
Right, back to basics.
Yeah. How did Swiggy become Swiggy? They weren't always this giant, were they?
Nope. Started back in 2013, actually, as Bundle Technologies.
Bundle Technologies, huh? Doesn't quite have the same ring to it.
It doesn't. They rebranded as Swiggy early this year, 2024. But even back then, they were pretty laser-focused. Food delivery. It was their bread and butter, their claim to fame.
Ah, so the classic story. Start small, dominate a niche, then expand.
Exactly. And expand they did. Look at them now. Quick commerce with Instamart, restaurant bookings through Dine Out, even event tickets.
It's like they want to be the app for everything. Hungry. Swiggy. Need groceries. Swiggy. Bored. Swiggy.
It's almost like they've created this ecosystem of convenience, haven't they?
They have. It's smart, really. Capture a user's attention and then offer them a whole world of services within your app. Keep them in the Swiggyverse.
Speaking of their offerings, this prospectus breaks it down pretty neatly. What they're doing, how they're doing it.
Laying out the goods. So food delivery is still their main gig, right?
It is, but get this. Quick commerce is gaining on them fast.
Fast? How? Like, how fast are we talking?
Instamart, their quick commerce arm, it's hit 40% of the food delivery's gross order value. And that's just in recent months.
Wow, 40%. That's serious growth. People want their groceries, like yesterday.
They do. Makes you wonder, though, is this going to last? Is this the future or just a fad?
$1 million question. I think it speaks to a larger trend, though, especially in cities. People are busy, time is precious, convenience is king.
Makes sense.
Uh-huh.
So Swiggy's tapping into that. And they're not just riding the wave, they're changing the game.
Oh, how so?
Look at Scootsy, their subsidiary. They handle those dark stores for quick commerce.
Dark stores, those warehouse-type places, right?
Yeah.
Dedicated to just online orders.
Yep, exactly. Used to be, Scootsy would lease them out to merchant partners.
Ah, so they were just the landlord.
Right. But now, they're taking control, handling all of the fulfillment themselves.
Interesting. More hands-on approach? Streamlining, maybe? Could be a sign of things to come.
Makes you wonder about their financials. Are they actually making money with all this expansion?
Well, that's the big question, isn't it? Let's see what this prospectus has to say about that. All right, let's crack open these financials. They did mention strong revenue growth, but
there's always a but, isn't there?
especially in the world of IPOs. So they're still operating at a loss. Not uncommon for a company in growth mode, but something to note.
For sure. They're spending a lot. Building that dark store network, expanding into new areas.
Exactly. It's like you got to spend money to make money, right?
Right, but investors want to know, when will that making money part actually kick in?
Absolutely. And they're laying out their plan in this prospectus, reducing delivery discounts, for one.
Ah, yeah, those discounts can be a double-edged sword. Attract customers, but eat into your profits.
Exactly. So less discounts, potentially higher margins. They're also looking at more premium offerings.
Makes sense. Fancy groceries, maybe, gourmet meal kits, things with a higher price tag.
Could be anything to boost those average order values. And of course, they're going to keep working on the whole logistics thing.
Efficiency is key, especially when you're delivering everything under the sun.
Imagine the algorithms they must be using, optimizing those delivery routes, minimizing those delivery times. It's fascinating, really.
It is. Okay, so we've got the growth strategy, the profitability goals, but what about the IPO itself? What are they actually offering?
So up to equity shares are on the table, and they're doing this two-pronged approach.
Two-pronged, you mean?
Fresh, issue A&D, and offer for sale. A bit of new, a bit of old.
Okay, break it down for us.
Fresh issue, that's where Swiggy issues brand new shares. The aim is to raise $44,990 million. That money goes straight into Swiggy's coffers.
Okay, so that's the money they'll use for all those ambitious plans.
Exactly. Then there's the offer for sale. Existing shareholders sell some of their shares up to euros million.
So that money doesn't go to Swiggy, it's just shareholders cashing out a bit.
Precisely. Transfer of wealth, not new funding for the company itself.
Gotcha. So anyone looking to invest got to know where their money's actually going.
Absolutely. Now, here's a little tidbit I found interesting, especially for smaller investors. If you're applying for shares under 500,000, you got to use UPI.
UPI for the IPO. Wow, that's really embracing the whole digital India thing.
Isn't it? Sign of the times. UPI's everywhere these days. As common as ordering food on Swiggy.
Speaking of food, let's get back to those ambitious plans. Where's all this IPO money going?
Prospectus lays it out pretty clearly. Dark store network expansion, big priority. Brand building, marketing blitzkrieg. They're not shying away from that.
Makes sense. Got to get the word out, especially with all that competition.
Right. And they're also keeping some aside for potential acquisitions. Always good to have some dry powder for strategic moves.
So growth, growth, growth.
Yeah.
But hold on, back to those dark stores for a second. That expansion's got to be expensive. Any risks there?
There are always risks. They did mention Scootsy's lease arrangements for those dark stores. Costs could go up, inflation,
Right.
Or maybe the landlords get greedy.
It's a gamble. Big rewards, but also big potential for things to go wrong.
There's always that balance, right? Risk versus reward. And speaking of risks,
Oh, there's more.
there's always more. This prospectus, it doesn't shy away from the challenges. Competition, for one.
Yeah, that's a big one. Everyone wants a piece of that delivery pie.
Right. Some competitors, they might slash prices, try to undercut Swiggy. Others might have a wider selection. It's a constant battle.
And Swiggy, they're not just battling other apps, they're battling entire industries. Grocery chains, online retailers, the whole convenience ecosystem.
It's a whole different playing field now. And let's not forget their reliance on partners. Restaurants, merchants, those relationships are key.
What happens if those relationships sour? Or if customer preferences change?
That's a risk. And there's the technology aspect, too. Remember those incidents they mentioned? The Instamart outage, the order processing hiccups?
Oh yeah, I remember those making headlines. Not a good look for a tech-dependent company.
Exactly. Shows how vulnerable they can be. One system glitch and the whole operation's thrown off.
It's a reminder, they're not invincible. Even the biggest, most innovative companies, they're still at the mercy of their technology.
That's the truth. And let's not forget the bigger picture, the Indian economy, global events, things outside their control. All these factors play a role.
It's a complex web, isn't it?
Yeah.
So many moving parts, so many potential risks to consider.
It is. And for anyone looking to invest, it's all about informed decision-making, weighing those risks, understanding the potential rewards.
Speaking of things to consider, this prospectus gets pretty deep into the whole regulatory landscape in India.
Ah, yes, the regulatory maze. It can be a bit daunting, especially for foreign investors. Lots of rules and regulations, limits on investments.
Do you think that might scare some people off?
Maybe some, but they're being transparent about it, explaining the rules, the caps on foreign investment, the difference between FPI and FDI.
Trying to be upfront, give everyone the full picture. So we've talked risks, regulations. What about the people behind Swiggy?
Good question. Earlier, we were wondering about the lack of a single promoter. Well, they do have some big-name investors. Excel, SoftBank, MIH, Elevation Capital.
Those are heavy hitters in the investment world. Their involvement definitely says something about Swiggy's potential.
It does. And let's not forget the leadership team. Anand Kripalu's the chairman, and Sriharsha Madredi, one of the founders, he's the MD and CEO.
So a mix of experience and entrepreneurial spirit at the helm. Sounds like a good combo.
It does, and they're taking care of their employees, too. Prospectus talks about their employee stock ownership plan, the ESOP.
So employees get a piece of the pie. That's a great way to incentivize them, make them feel invested in the company's success.
Exactly. Aligns everyone's interests. Everyone wins if Swiggy wins.
Speaking of winning, what about the future? We've talked growth, we've talked risks, but what's next for Swiggy?
Well, that's a million-dollar question, isn't it? They've got all these plans, all this potential, but it's a tough market out there.
So much competition, so much pressure to innovate, to adapt.
And they're still figuring out the whole profitability thing. It's a balancing act. Growth versus sustainability.
It's going to be fascinating to watch it all unfold, that's for sure.
Yeah.
Their journey, it's a reflection of India's tech scene, isn't it?
It is. The energy, the innovation, the challenges, the triumphs.
And this IPO, it's just the beginning. A new chapter for Swiggy, a new chapter for the Indian market.
Absolutely. Buckle up, folks. It's going to be a wild ride.
Okay, so we've covered the risks, the competition, the regulations, all that fun stuff. But now I want to talk about the exciting part.
You mean the future?
Exactly. Swiggy's not just sitting back counting their IPO money. They've got big plans.
Oh, they definitely do. And this prospectus, it gives us a glimpse into their roadmap. They're not shy about their ambitions.
Not at all. And a big part of those ambitions, quick commerce, we talked about how fast it's growing.
Yeah, catching up to food delivery in a big way.
So what's the plan? More dark stores.
Definitely a key focus. A good chunk of that IPO money is earmarked for expanding that network.
So Swiggy's betting big on speed and convenience. Faster deliveries, more options, closer to the customer.
That's the game plan. They're aiming to be the go-to solution for anything you need right now. But it's not just about bricks and mortar.
Oh, what else?
They're also investing heavily in marketing and brand building. Got to get the word out, make sure everyone knows what Swiggy's all about.
Makes sense. In a crowded market, you got to stand out. What kind of marketing are we talking about? Big, splashy campaigns.
All of the above. TV ads, online campaigns, partnerships, influencer marketing, they're pulling out all the stops.
They want to be top of mind. When you're hungry, when you need groceries, boom, Swiggy's right there.
Exactly. But they're not just competing with other food delivery apps anymore. They're taking on entire industries.
Grocery chains, online retailers, even your local Kirana store. It's a whole new ballgame.
And that's where their strategy of creating a unified app experience comes into play. One app for everything. Food, groceries, reservations, even movie tickets.
Keep users engaged, keep them coming back for more. The prospectus actually highlights how well that strategy is working.
Yeah, the numbers don't lie. User base is growing steadily. More importantly, people are using the app more frequently, ordering more often, exploring different services.
They even included this cool cohort analysis. Shows how user retention and order frequency have been improving over time.
That's the sign of a healthy business, not just acquiring new users, but turning them into loyal customers.
So how do they plan to keep that momentum going?
Well, a big focus is on improving contribution margins, basically making more profit on each order.
Got it. So less discounts, maybe? Higher priced items?
Could be. They're also looking at subscription models like Swiggy One, offers polks, discounts, loyalty rewards.
Ah, the subscription game. Lock in those customers, create a recurring revenue stream. Smart move.
Very smart. It's all about building those long-term relationships, turning casual users into Swiggy fanatics.
Okay, so growth, loyalty, profitability, it's all there in the prospectus. But let's zoom out for a second.
A bigger picture.
Yeah. What does Swiggy's IPO mean for India? Is this just another tech IPO, or is there something more here?
I think it's a lot more than just an IPO. It's a statement. India's arrival on the global tech stage?
We're seeing so much investment pouring into the Indian tech sector. And Swiggy, they're right at the forefront of that wave.
Absolutely. Inspiring a new generation of entrepreneurs, showing the world what India can do.
It's not just about technology, though. It's about the Indian consumer. They're changing habits, they're rising aspirations.
People are embracing convenience, they're comfortable with digital payments, they want it all, and they want it now.
Swiggy's tapping into that. But let's not forget, it's not all smooth sailing.
Right. Operating in India has its challenges. The regulatory landscape, logistics, competition, it's a tough environment.
And this quest for profitability, it's a reminder that sustainable growth takes more than just a good idea.
It takes planning, execution, adaptability. You gotta be constantly evolving, staying ahead of the curve.
So as we wrap up this deep dive, let's leave our listeners with a thought. Can Swiggy keep this momentum going?
Can they navigate the challenges, reach that elusive profitability, and become a true icon of the Indian digital economy?
Big questions, and only time will tell. But one thing's for sure. Swiggy's story is far from over. This IPO, it's just the beginning.
The beginning of a new chapter. And we'll be here to analyze every page. Thanks for joining us on this deep dive into the world of Swiggy. Until next time.